Welcome to ACCA Masters. In this video, we will discuss about the paper pattern of F6 ACCA and also the introduction of UK tax system. So first we talk about the paper pattern. The paper of F6 consists of three sections. Section A has 15 MCQs. These MCQs can be asked from any area of syllabus. Each MCQ of 2 marks. So the total marks are 30. The time limit is also important. So this section should be solved in 54 minutes. Section B, it has 3 OTQ questions in which you have been given a scenario and you have been asked 4 or 5 questions from that scenario. Each OTQ question is of 10 marks. So the total marks are again 30 and the time limit is 54 minutes. These OTQ questions can be asked from these topics. Number 1, capital gain tax. Number 2, value added tax. And number 3, inheritance tax. These are the 3 topics for 3 OTQ questions. Then there is a section C. It also has 3 questions. Question number 1 can be asked from any area of syllabus. This question consists of 10 marks and the time limit for this question to be solved is 18 minutes. Then there is question 2 and this question is about the calculation of income tax liability of individual. Calculation of income tax liability of individual. This question is of 15 marks and the time limit to solve this question is 27 minutes. And then there is a question 3 and it is about the calculation of corporation tax liability. This is also of 15 marks and the time limit for this question is also 27 minutes. Now it is about the introduction of UK tax system. First of all, we will discuss about the purpose of taxation. Tax is used to raise money for defense area where the government has to spend amount for the law and order situation, for the government and the parliamentary cost. As the government objectives changes, the taxation policies are also changed. There are many factors which can influence the government tax policy, and in the UK tax system, encourages the following. Number 1, it encourages saving. In UK tax system, saving is encouraged by offering tax incentive on saving account, like the example of saving account where tax incentive is offered is individual saving account. Second, UK tax system encourage charitable donation. By offering tax relief, like in this way, they provide a relief by extending the rate bands. And third, they offer tax relief for the investor and the owner of the business. Offer tax relief for investor and the entrepreneurs. So these are the three things that UK tax system encourage: saving by offering individual saving account where amount can be deposited free of tax, and then they encourage charitable donation by offering tax relief. In this case, they offer tax relief by extending the rate band. And third is offering tax relief for investors and entrepreneurs. UK tax system discourages certain factors. It discourages smoking. It discourages use of alcohol products, and also it discourages motoring. How? By imposing heavy tax duties. UK tax system is administered by HMRC and it has different types of taxes. So the taxes in UK are: number 1, income tax. This is payable by individual on their earning, either from employment or from self-employment. Second type of tax is national insurance contribution. This is also payable by the individual who are either employed or self-employed, and this is also charged on their earning. Then third type of tax is capital gain tax. This is payable by individual on the disposal of certain type of capital assets. Here in tax, capital assets means land and building and also shares. Apart from this, the antiques and the paintings are also included in the definition of capital assets. The sale of capital assets generate capital gain, and which capital gain tax has to be paid. Number 4 is inheritance tax. This is payable by executor on the value of estate, and it is also payable in respect of certain gifts during individual's lifetime. Fifth type of tax is corporation tax. This is payable by company on their income as well as on their gains. So the company have to pay the corporation tax on their income as well as on their gains. And the last type of tax is value added tax. This is payable on the supply of goods and services by the final consumer. Now we will discuss about the classification of tax system. Classification of taxes. Taxes can be classified as direct tax or indirect tax, and also they can be classified as revenue tax and capital tax. So first we will define the direct tax. Direct tax is said to be a tax that a person or an organization pays directly to the entity that imposes it, like to HMRC. Direct taxes are those that are charged on income, that are charged on gain, and they are directly collected from the taxpayer. Example of direct tax are income tax, capital gain tax, corporation tax, NIC, and inheritance tax. Indirect tax. This is said to be a tax that can be passed on to another entity or individual. They are usually imposed on the manufacturer or supplier, who then passes on the tax to the consumer. The most common example of this is value added tax. Then it is about revenue tax. Revenue tax is said to be a tax that are charged on income. And last is capital tax. Capital tax is said to be a tax that is charged on capital gain. So let's classify the tax and their classification in accordance with direct or indirect or capital or revenue. First, it is about income tax. If we need to consider about whether this income tax is said to be direct tax or indirect, so according to that, this is direct tax. And secondly, if we want to classify it as either a revenue tax or capital tax, then it is a revenue tax. Second, capital gain tax. This is also direct tax, and this is said to be capital tax because it is charged on capital gain. Third one, corporation. This is also direct tax. This is also direct tax, and this is said to be both revenue as well as capital because corporation has to pay tax on their income as well as on their gain. As they have to pay tax on their income, that is why it is a revenue form of tax, and also they have to pay this corporation tax on their gain, so that is why it is also called as capital tax. Then fourth is national insurance contribution. This is also a direct form of tax, and it is revenue because it is charged on income. Fifth is inheritance tax. This is also a direct form of tax, but it is capital tax as it is charged on the state. And last is value added tax. This is the indirect form of tax, and it is neither the revenue or nor the capital tax because it is the tax which is charged on consumption rather than income or capital gain. Now it is about tax year. In accordance with UK tax system, the tax year starts on 6th of April and ends on following 5th April. In the current year, our tax year starts from 6th April 2021 and ends on 5th April 22. Next, we will discuss about the taxation principle followed in UK. The taxation principle followed in UK is said to be progressive system. Progressive system means as income rises, the proportion of tax raised also rises. Here we need to consider with the help of the band rate. In the current year 21-22, if an individual has an income up to £37,700, then he has to pay tax at the rate of 20%. And if he has income from 37,701 to £1,50,000, then he has to pay tax at the rate of 40%. So as income rises above 37,700 of basic rate band, the rate of tax also raises to 40%. This is known to be basic rate band. This is known to be higher rate band. And above, if an individual has an income above £1,50,000, he has to pay tax at the rate of 45% on the income in excess of 1,50,000. So this is known to be additional rate band. So these three rate band represent the progressive system. As the income rises, the tax rate also rises. Apart from progressive system, let's discuss about the definition of other system. Another system of taxation is known to be regressive taxation. According to this system, as income rises, the proportion of tax paid falls. So regressive tax system represents a greater proportion of income of a lower income earner than a high income earner. For example, the tax on a liter of petrol is the same regardless of level of income of a purchaser. Next is proportional taxation. It means as income rises, the proportion of tax remain constant. There is no change in the tax rate. Means 10% of all earning regardless of level of earning. Now few important terms like tax avoidance and tax evasion. Tax avoidance is said to be where an individual or a company legally exploits the tax system to reduce the tax liability. And where tax evasion is said to be where company or individual escape paying tax illegally. So tax avoidance is legal while tax evasion is illegal. Some common examples of tax evasion are not informing HMRC about the tax you owe like business profit, keeping the business off the books by dealing in cash with no receipts, and hiding money, shares or other assets in offshore bank account. These are the example of tax evasion. So these are some basic points about the UK tax system. We'll consider some more points in the next lecture.